Good morning, traders. It's 8:02 a.m. Chicago time on Monday, the 28th of March, 2022. First and foremost, let's get a quick mic check. Let me know if I sound like a robot again or if it's all clear or cracking or whatever. There's always a surprise with this tech. Very good. Thank you. This is episode number 2200. 2200. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. And here we are. This is the CT pre-market, the convergent trading pre-market summary sheet showing us that we're in a very mixed market. The Euro zone indices showing a fair amount of strength here. Up 129 basis points on the Euro Stoxx 50, which is about the equivalent of the S&P 500 for the Eurozone. And then the German DAX is showing 146 basis points, pretty strong. Crude is coming off and has been throughout the session. It actually opened with a quick splash down. A bit of a flush, and has been trending down since. It got below 1110, which was support, and then it became resistance in the overnight session, and it's got a weakish low, expecting it to continue lower. Crude down $6.50 or 570 basis points, and that's where that stands. So what's driving things? Really, there's a lot of talk about Russian crude oil or energy deals falling through. So demand destruction. And I'm not seeing much else. There's definitely a lot of work being done to help Europe deal with this energy crisis. Gas deals between the U.S. and the Eurozone, and so on and so forth. So supply coming online that wasn't there, Venezuela, and so on. So we'll see where that goes. Crude has been very, very strong despite news events that have pushed it down, and we'll continue to monitor that. UK inflation expectations at all-time record highs. In a survey, the U.S. 35-year yield has inverted. This hasn't happened since 2006. If you recall, 2006, around I think November of 2006, was the top of the real estate bubble before the crash in 2008, and then the ensuing correction late 2008 into 2009. Not saying the world's coming to an end. I don't know, but this is kind of the story. Every time, it's always different, right? Every time is different. Ukraine conflict. There's a lot that's being pushed through the news feeds for Ukraine. There are negotiations that the Russians are saying are not going anywhere. There's also some attempts by the Ukrainian president or prime minister. I don't remember what his title is, but there are attempts at negotiation, attempts at a peace treaty. Turkey's involved, trying to get Russia to accept a ceasefire and a discussion. So there's a lot of that. There's continued headline risk as a result of this. In any case, we're coming into a mixed market. You can see right in front of you the S&P just slightly off of settlement. The S&P actually has dropped approximately 13 points from the high, and maybe even a little more, 15 points or so from the high. And everything else has really pulled off from the highs just since 7 o'clock, or since about an hour ago, 7 o'clock Chicago time. And so that's where that stands. We're seeing a pop in crypto, Bitcoin pushing through the 46,000 level. this puts that whole Bitcoin thing that I've been referencing for a while, since late November, since Thanksgiving. I've been bearish crypto. This actually is challenging the resistance that I have around 46,000. So it looks like Bitcoin and ETH actually are both challenging the resistance and have pushed through. So this may be a reversal and continuation in those products, ETH and Bitcoin. So keep an eye there. Of course, it's not everybody's trading crypto, but it's definitely worth a look, in my opinion. Looking at the S&P, it's a multi-distribution day, a very active auction. We'll pull it up in a minute. 163,000 contracts is relatively standard for this time of day. So we are past the heavy volume and volatility that we've seen in the last 2 months or so. Things are actually calming down. In fact, if you look at the rotations, very important that you look at this, especially every Monday, because I update these for the week. The rotations have gotten crushed. This was at 9.5. This was at 48. This was much higher. Crude was in the 80s, 83 cents, I think, last week. Now at 56. This is a indicative of a rally. When the market rallies, the ranges drop and the volume drops. So pay attention here. The harmonic rotation for one standard deviation, what we would consider to be a normal rotation on a 1 minute bar based on 10 sessions, the top to bottom on a 3-bar rotation, or a 3-bar top, 3-bar bottom. Looking at those rotations tells us that 8 points is 8 points or less in the S&P are within one standard deviation. What does that mean? It means it represents 70% of the data set, which means this is what we consider to be normal. This number here is normally 3.5 points, 3.5 points historically. So it's still quite elevated. So our stops remain relatively wide versus the historical norm, but it's falling quite dramatically or quite quickly between last week and this week. Something to keep in mind. This is also a profile-based range. It has also dropped just ever so slightly, I think 56 to 53. This is anything that's 53.75, call it 54 points per day or less is considered normal. Anything above here is considered unusual, and it starts to move into the second standard deviation of the data set for the NASDAQ 264. So it doesn't mean we expect 54 points for the day. It means we can expect up to 54 points on the day. We'd have to look at the point of control to see the most common range, which is around 38 currently, 38 or 40, I think. So that's that. The range so far in the overnight session is 34.5 points. So we anticipate that that's what we're going to get, and that as a minimum, we'll get that during the day. The inventory is 40% short, meaning 40% of the overnight volume occurred below the settlement price, which is at 45.36.50. 45.36.50. 40% of the volume is short. 40% more of the volume is short, and the point of control is at 45.33. We are just below it, trading at 45.30 right now. So we are trading just below the point of control. Let's take a look at, and as far as the calendar, this morning we did get some numbers. We got wholesale inventories, which came in pretty high, actually, which was interesting. The prior's 1.1, the expectation 0.7%. We came in at 2.1% Inventories rising. That's not such a bad thing. Retail inventories at 1.2% versus prior 1.7, and a forecast of 1%. And we have the Dallas Fed's manufacturing index, which is a low tier figure. And then we get the unemployment rate out of Japan. And then President Biden is supposed to give a speech on the 2023 budget, which is supposed to be heavy on military spending again. And it will be discussing a new tax initiative to tax billionaires. We'll see how that goes. So that's likely to be important, but I can't tell yet. Here's what happened on Friday. Friday, we had an open auction. We had an open auction out of range. We actually did what was expected here on Friday, which is to respond and test the prior range. So very important on a gap up to keep an eye on the prior high. You could see that I talked about this, Thursday's high was very weak, and the expectation would be taken out overnight, which it was. Then we tested the prior high, came back, held the prior range, and we pushed higher. And in this case, I was looking for it to push as far out as 45.50. And then we came in and immediately sold right after breaking the IB high. We sold, we tested the prior high from below, and we continued lower, but we could not get to the prior day's point of control at 44.89, 44.90 really. And then we consolidated for the session quite a bit. A nice little short there against the mid VWAP confluence for a rotation, a relatively large rotation, and of about 15 points, I think. And then we move back into the range, consolidate, and then we have this rally in the close, which I didn't find tradable at all. And then we closed right at the high. So what we had is a push up, neutral day, consolidate, and then we went back all the way to the other side. And what this is saying, this is almost like a double neutral extreme. We tested above, we pulled below, and we ended up closing above. Very, very unusual behavior. Very bullish here. The auction was interrupted. We expect this to continue to climb into the ensuing session. Here it is, the ensuing session. Remember Friday's high was 45.39. We immediately pushed 40 on the open last night, pull all the way back to the mid of the last session and the low volume node of the last session. Hold this area, full session mid, and then we've walked ourselves back to 45, 48, 50, almost to the 50 that I talked about just a minute ago. And then now we are battling against the VWAP. We're battling against the overnight point of control. And what we have is a multi-distribution profile that is fat all the way through. It's a box profile, which tells us that price discovery was very active throughout the session, through all prices. So there's active price discovery, but the volume isn't really there. So what we have here is lack of consensus on what a fair price is, and I expect that to continue into today's session. So we are just below Friday's high of 45.39. We're trading at 45.33 currently. We're up against the overnight point of control. We're up against the mid and VWAP. And so I'm expecting the open to be what? What is given all of that? What should we expect on the open? Let's see what you guys think about given where we are. What do you guys think the open is going to bring? Again, we're opening against the overnight point of control, It looks like we're below the overnight point of control, below VWAP, above mid in RTY, below the overnight point of control at VWAP, above the mid in the YM, and in the NQ, we are above the overnight point of control, above the mid. It held the mid just now, which was a prior high. The mid's at 45,736 in the NQ and above VWAP. So bullish-ish on the NQ, and the Russell and the Dow are showing bearish-ish, while the S&P is right there in the middle. So yes, we do expect some balance and chop. We expect it to fight. We expect a two-way fight this morning. The market very, very often opens up in chop. Look at what we've accomplished since this last low from 2 weeks ago. Very elongated week. Every box, remember on this chart, every box and profile represents 1 week of trading. The change in color in boxes is a change in months, so we can see what our one-time framing is. So what does that mean? For March, we are still inside of February's range, and we have 3 days left in March. 3 days left, actually 4 trading days. Today, tomorrow, Wednesday, Thursday. We have 4 trading days left, and we have an inside month, March over February. The key figure to test above, which breaks the one-time framing down cycle. Remember, January started with an all-time high, went all the way down in the current contract, corrected for the current contract, went all the way down to 42.04. February started the month with a high of 45.7750, and it put in the swing low of 4100 and a quarter, and then March put in a swing low of 41.44, and so far the high is Friday's high at 45.39. So there could be a reversal on the monthly in the making. We had a higher low last week to the prior week, and then we had a higher low prior week to the week before that. One-time framing on the weekly is positive. One-time framing on the monthly is short, is negative, right? Is short. So one-time frame, we still have the high of February still unchallenged, and that's the main price that we are looking to test. Currently, what we've done is we've moved from this 43.3450, the former 43.43 in the March contract, and we've moved away from it, and we have established this new point of control of 4,500, and then we're likely to, and we are right at the low volume node here at 45.32 to 35. We're at this low volume node. Very important to note this. Okay, so if we fall back in, we're targeting 4,500. If we push over today, we're targeting the 74 to 77, and this is really bad news for shorts, since the next area we're likely to test is 46.65. 46.65, this next high volume node. So we are right in here, and then we have a little hill to climb at 45.60. We have 45.74, which is the next low volume node-ish area, 45.80 or so. If we clear the 80, the 4600 is likely to go, and we're at 46.60, which is completely unexpected. Most are betting, most people looking at the yield curve and the Eurodollar yield curve and all this macro stuff. A lot of people are still holding on the 4600 as the top area. I think some interesting stuff is likely to take place from here, but we have worked our asses off. The buyers have worked their asses off here to get back through the 4,500 and to start giving the February shorts a run for their money at 45.74, 75. Okay. 45.74 to 45.77. That's the next big challenge. It's like a double top right here, former low, and so on and so forth. Very important to look at the context here. We've already exceeded the 200-day simple moving average. We pushed through the 100-day simple moving average. We're above the 50. We're above the 20. I mean, a lot of things are kind of playing along here to support the longs, despite a wall of worries, including inflation, the cost of energy, and so on and so on and so forth. It does not matter. The market is showing it's likely to continue higher. What are we expecting for today? Oh, before I do that, hey, did you guys take a moment to sign up for this giveaway? We're giving away, Edge Clear is giving away 3 Bose Quiet Comfort noise canceling wireless gaming headsets. Great for journaling, great for Zoom calls or talking to other people. They're valued at about $350 a piece. Giving 3 of them this Wednesday. You have to sign up before 11 a.m. Eastern. The URL is edgeclear.com/deli. Sign up to be on the picker wheel, and I'm doing a talk on Wednesday at 12 p.m. Eastern time about the how-tos of trading sustainably. There's going to be a lot shared. The series, which is 12 months long, and every month Edge Clear will be giving something away. The series is intended to give traders actionable advice from myself or other speakers to help you improve as a trader. Make sure you go to register, edgeclear.com/deli. Your information will not be sold, traded, or provided to anybody. So what do we have here? So let's take a look. This morning, being as we are, right against VWAP and mid. Actually, let me stretch this a little bit. Turn that off. Where's the first sigma? Right there. First sigma. There we go. First sigma. Okay, so this morning, open auction. We're inside of Friday's range. We have a weak high on Friday. Looking for an open auction. I'm looking for the market to test down, consolidate in this area. I don't know where. I don't know if it's between, somewhere between 45.30 and 45.20. Looking for it to consolidate, and I'm looking for a push to then hold the open, and I'm looking to challenge this excess high. Look at these tops. I'm looking to challenge this excess high, clear this low volume node, and push to 45.50 this morning all the way up into this naked point of control before we rest up. So I'm still looking for the market to continue to drift higher and bullish. If it opens in an open auction, challenges that 45.39.40 area, cannot clear this low volume node, and I'm going to be paying very close attention at that low volume node or the 39 area, and it falls back in, then we're looking for a short back to the magnet of 4,500. The over underline, the key over underline for the session is still 45.14. 45.14 to 45.16. Very important support or base right now. Short-term base, using that as the over underline. If it gets below the 45.14, in fact, there's a wiggle here. I'm expecting that an attempt to get back above the 45.16 is likely to be resisted, and that sets up a short into 4,500, getting us back into balance. 4,500 is the MC point of control of last week. It is the most traded price. It's the most accepted price, and that's where I'm expecting us to go if buyers are not able to hold these higher prices. Okay, so we're seeing a rally in the treasuries today that may be supportive of higher prices in the indices as it pushes yields down. I know the 5 and 30 have inverted, but still, price is showing us what it wants, and the delta overall in the S&P is for buyers. I'm seeing the delta actually positive for the Nasdaq as well. Nasdaq holding up pretty well, despite the fact that Tesla is going to have to shut down production in Shanghai as China has closed or has restricted access due to COVID breakout. Also, Apple adjusted its numbers for its AirPods and iPhones as a result, and that's what's partly what caused this push down. We'll see how that plays out. I know this was a long one. Good luck, everyone, and I'll catch you tomorrow morning. Take care.